I'm going to be showing you guys how I passed a phase one funding traders account in 2 trades. This isn't for me to brag. This is for me to show you guys it is actually possible to pass a funded account quite quickly. Of course, I have phase two to still go, which is down 2% at the moment, but that's fine. I'm going to take a trade today and hopefully pass it. But I'm going to show you guys how easy and simple it is. Once you have a strategy and you have a plan, you can remove the emotions. So if I show you the account on my phone, I'll show you the 2 trades that actually passed us. I believe they were back to back. I think it was a Monday and a Tuesday, and on the Tuesday I passed it. So here we have the first trade. This is a simple buy down at that low, and then we was able to run up to that high. I was going to target the London high. However, I got out of the position because I was up 5.2% to start off with. And I was also, I didn't want to pass it in one trade, basically, because it will flag you up as a trader, from my perspective anyway. And then the second trade that we took was the next day, I believe. Let's make sure it was. Yeah, it was the next day. And it was a simple same kind of theory. And we was able to run up to that high. Again, I targeted that imbalance, didn't target the high because I didn't need to, because I only need to make 2.8%. And that is the funding traders phase one complete. We do have phase two here. This is down 2%, as I said. And if we go to the chart and try find those trades quickly, we have them here. So again, I kind of was very right on the trade. I just got swung and I should have re-entered. Problem is I re-entered like 2 seconds later. And again, that was, to be fair, me being emotional. I should have waited for the structure, the trade to present itself, and then take it. I was just angry that I got stopped out very quickly. And then when the market actually fell even more, I kind of wanted to get back in on that base of support. But anyway, it doesn't matter. Well, so the first trade here, if we go on trader view, have a look at my desktop, I can show you the trades. Let me just turn my screen recording off on my phone, and that is recording. Sweet. So the first trade here, we have this presented low, and this is going to be our Asian low. That's how I simply mark up our levels. Then we have our VSR low. What is a VSR low? This is our V-shaped reversal low. So you can see this is where the market presented this Asian low, ran up, and then it was able to actually break the Asian high and continue this move up into the London session, which created this V-shaped reversal. So this was a key zone for me. Then we have, obviously, the London high, a slow fade off into this level. If we just jump on the 5-minute, we can see it a bit more clearer. We have our Asian low, we have our VSR low, we have our Asian high, and then we have this London high. So how is my mindset presented in this trading period? So the market's moving up, of course, and we need to go swing some liquidity towards a low. We're going to have to gravitate towards that liquidity. If we do swing that liquidity and then we get a break towards the upside displacement, then I can be looking for a potential opportunity to go target the next level of liquidity, which is the London high, okay? So there's my bias for the day. I wanted it to swing a low, pretty much, give me a buy level, and then I'm going to target the next level of liquidity, or I want the market to gravitate towards that liquidity. I don't always have to trade to the high. So we have 2 levels now. So we have our VSR low, we have the London low. And my theory was it's going to go run to the London high. That's my bias on the day. However, we can look to move towards the Asian low. So I'm going to wait and make sure that the market is actually going to be presenting us the markup. So where does the New York session? So the New York session opens up at this black line, and immediately we got a sell-off. Okay, that is a really good indication when I'm trading, is an instant move to a key level. So we had the instant move to that key level. The market swung this level, and as you can see, we had a nice doji candlestick. The market started to mark up. We had a reversal back into this area, held it, and my bias wasn't a buy entry on this. It was more of an intuition thing. So it doesn't look as good on my trading view, but this is a nice doji candlestick that marked the move up. And then as soon as we had this kind of impulse from there, I also had flow on black box stocks. And then from there, I looked to purchase my order and then place my stop below the level. And I basically, which is not a good thing to do, but I basically anticipated this price action to happen, which is where I should have entered, okay? So we have the mark up by here. If we just move this out of the way, we have the mark up by here. We have a huge sell-off back into this area, and then we have the bullish engulfing, which presented a small imbalance by here. With this displacement, you can have an equilibrium buy order at that limit. So we could have literally entered longs here as well, and then had the move up, and then you could have literally just placed your stop loss below these lows and then waited for the London high to be targeted. This is another reason I don't like putting my stop loss at break even. So if I have my stops below that low and we're targeting the high, we have a current 3.69, which is not really good for me. But let's say, for example, we put our stops to break even. All the market wanted to do is pick up this order block that was created, and then the market ran from there again and swung the high. So that's why I don't really like putting my stops to break even. In some cases, yes. If it's a funded account, yes, it makes sense. But if it's a challenge, it's kind of like just leave it and let it do its thing. So I didn't buy based off this buy order, but I basically anticipated that buy order to happen after the swing of London low and the VSR low. Now we can move to the next trade. So that trade netted us around $5,000. Now we can move to the next trade, which again, I didn't hold this trade, but if we have a look at the day, I can show you guys kind of my intuition orders. So of course we had this low previous day. Well, it's not a previous day low, it was the previous day low, and then we had this gap up by here, and the market wanted to fill that gap, which is fine. Okay, so the market opened up. This is presented the Asian high, which tapped into a imbalance on a higher time frame. We have an Asian low which got broken, so the market's looking very, very weak. The market then carried on breaking down, presented this London low and this London high. So I'm thinking it wants to go swing that London high, and if not, come back into this imbalance on a higher time frame. If we go into the hourly time frame, we can see we have a lot of imbalances by here, and we have this higher time frame imbalance by here, which got tapped in perfectly here, which I didn't even spot. I could have traded that. But yeah, we kind of are coming back into these imbalances. Then nothing really much down here for the market to go and swing. We've already liquidated all these lows, so the market basically, in my mind, wanted to look to get back into that kind of area and start pushing up towards filling this entire imbalance or going up to this order block. And we also have kind of like this support area that's been held for a long period of time. And as you can see, it's literally held yesterday as well, I believe. So the market tapped into that low there, which was really nice for me to see. And then we had a nice engulfing candlestick by here, which presented us buy opportunity. So we have the London low sweep, the market sold off, marked up. And what we had here is an imbalance being created. The market didn't break structure at all. But for me, on the 30-second time frame, I can't show you on trading view because I don't have it. But on the 30-second time frame, we had small time frame breakups. And as you can see, I usually use a two or three candlestick move. If the market breaks above 2 or 3 candlesticks, it's kind of looking like a good displacement level. As you can see, the market marked up. We had this high that got broken. The market's continuing on. We had this engulfing candlestick, and then we filled that imbalance one more time. And then we had a bullish engulfing, and we broke this high as well, which could have been a potential buy stop there. It could have been this fair value gap tap in. It could have been anything. So you could have literally just had a buy order there, or down here like me, which is around there. So then the market had that mark up out of that zone, and then from there it's kind of like, yeah, the market is going to swing the next level of draw on liquidity. Where's the next draw on liquidity? It is going to be the London high. It's very simple. Mark out your levels, trade what you think. And that was able to secure me my phase 1 on my funding traders account. As you can see, this is my account on funding traders. Profit target's been hit, of course. These were the 2 trades. This one was half the volume, just because I didn't need to have that much. We also have our times. So we have 5 minutes and 15 minutes, which is like perfect amount of time. It usually happens in after the first half an hour of the New York session open. 100% win rate, of course, and that is the account passed and moved on to phase 2 now. So if you guys like the video, please let me know in the comment section, and let me know if you're going to get a funding traders account. If you want to get a funding traders account, use the code CRETRADES at checkout for 30% off, or they have the coupon code TREAT40 for you to take 40% off. My honest opinion on funding traders is they are brilliant. You can see the screen recordings of my trades, no slippage at all, really good fulfillment entries, and as soon as I passed the account, there was no waiting. I got my stage 2 credentials immediately, and not to glaze them, but this is my first time trading with them, and they have been brilliant. I've got 100k with them and 200k with them, so we're going to see how it goes, and I'm going to keep you guys up to date on everything that I do. Please feel free to go check them out. I'll have a link in the description, and I'll see you in the next video.